All right, let's talk about something that tends to fly under the radar until you really need it, and that's private mortgages. Now, for a lot of people, the moment they hear the word private, their guard goes up. They think high rates, desperate borrowers, shady deals, and honestly, I get it. That's the reputation it's picked up over the years. But I'm here to tell you that private lending, when used properly, is one of the most strategic tools you can have in your back pocket. And it's something I use often with clients who are making big moves, building, flipping, or just trying to keep their plans on track when life throws them a curveball. So today, we're going to walk through the what, the why, and the when, and most importantly, how to make it work in your favor. So, what is a private mortgage really? Let's start at the top. What exactly is a private mortgage? At its core, it's simply a mortgage that comes from a private lender. So instead of going through a traditional bank or credit union, you're borrowing from either an individual, a corporation, or a mortgage investment company, what we call a MIC. The biggest difference here is that private lenders don't play by the same rules as the big banks. They're not as focused on your income or your credit score. What they care about is the asset, the equity in the property, and your exit plan. So, if the property is solid and the plan is clear, they're often willing to lend on where the banks won't. That makes private mortgages an incredible solution for clients who might be self employed, going through a major life transition, carrying bruised credit, or they just don't fit into that neat little box that the institutional lenders expect you to. I'll give you a real example. I had a client last year who was buying an investment property with a closing deadline that was fast approaching. They had already been approved through their bank, but the bank suddenly pulled the file back last minute, questioning the source of funds. You know how that goes. Rather than lose the deal, we pivoted to a private lender who looked at the value of the property, confirmed there was enough equity and down payment in play, and closed the deal in 5 business days. Yes, the rate was higher, but they secured the property, and 3 months later, we refinanced them into a traditional mortgage at a lower rate. That private loan was just the bridge they needed to get to the finish line. Another time, I worked with a couple doing a major renovation. The bank wouldn't lend against the as improved value of the home, and they didn't want to pull from their investments or savings. So we used a private second mortgage to fund the renovation. Once the work was done and the home had appreciated in value, we rolled everything into a clean refinance. No CMHC, no headaches. These kinds of situations are exactly why private mortgages exist, to solve short term problems so you can still move forward. Now, let's be clear. Private lending is not a long term strategy. It's not supposed to be your forever mortgage. It's meant to be a stepping stone. So, when does it really make sense? Well, to be honest, it's when you're in transition. Maybe you're separating from a spouse or dealing with an estate or building your credit after a financial setback. When you're self employed and your income on paper doesn't reflect your actual cash flow, which, let's be honest, is so common for entrepreneurs. Or maybe you found a great investment opportunity, but your bank is dragging their feet and you're about to close the deal. Or you've got a bunch of debt piling up and consolidating it into one private mortgage gives you breathing room, even if it's just for 12 months while we build a plan to get you out. But let's talk about the flip side. Private lending is powerful, but it's not cheap, and you need to know what you're getting into. Rates are higher. You could be looking at 7, 8, 10, even 13%, depending on the file. There are usually lender fees and broker fees attached to these transactions, and most terms are short, 6 months to a year, sometimes interest only payments. This is where working with the right mortgage agent, one who understands strategy, becomes crucial. I never place a client in a private mortgage without a clear written exit plan, whether we're refinancing into a better product later or selling the property or shifting to another lender. We map that out from day one. One of the biggest advantages I bring to the table as a level 2 agent is access. I work with a wide network of trusted private lenders who know how I package files. They trust my judgment, and because of that, my clients get options they wouldn't otherwise have. And here's the thing, even if we don't go the private route, just knowing you can gives you leverage. It gives you speed, it gives you time, it allows you to say yes to things other people are walking away from because they don't have a plan B. It's like having a financial parachute. You may never need to pull it, but if you do, it's there. Private lending isn't scary, it's not shady, It's just another tool, and when used correctly, it can be the thing that keeps your real estate goals alive during moments of uncertainty. If you're in a situation where the banks have said no, or you just want a second opinion on what's possible, let's talk. Book a discovery call with me and we'll figure out your next best move. And don't forget to hit the subscribe button if you're into smart real estate strategies that actually reflect real life. I'll break it down here, and I always keep it real. See you guys in the next video.